Hey everybody, I'm Rob Freeman, and today we're talking about the difference between actual cash value and replacement cost in property insurance. And if you're not familiar with what the difference is between actual cash value and replacement cost, it pays to understand these two terms because the type of coverage that you have in your property insurance policy can make a big difference when you have a claim. So let's start with actual cash value. What does actual cash value mean? Actual cash value means the cost of a thing, a piece of property new, minus depreciation. So if you have, say, a computer that you bought 5 years ago for $2,000 and you used it for 5 years, you got 5 good years of everyday use out of it, and then at the end of that 5 years, something happened to it, it was lost in a fire or was stolen, and you filed a property insurance claim, the insurance company is only going to pay you the actual cash value that they calculate for that computer, which might be $200 or $150, however they calculate it. But it won't be the full value that you would need to purchase a new computer because you lost the old one. So actual cash value policies, as you can imagine, are less expensive than you would pay for a replacement cost policy. And replacement cost is something that is can be defined as very simply as the cost to purchase that thing that was lost new or to replace it with something of like kind and equal value. And replacement cost policies basically means just that. If you lose something that you have in a replacement cost policy, you're going to be paid the cost of that thing, whatever you agreed with the insurance company it was worth. So if you bought a computer and it was $2,000 and you insured it for $2,000 replacement cost, even if you used it for 5 years and it was really only worth a couple $100, if you lose that and you had it insured for $2,000, you would file a claim and get the $2,000 worth for that computer. And that's why replacement cost policies are more expensive than actual cash value policies. And it also pays to understand which one you have, because actual cash value is a term that is often somewhat ambiguous in property insurance policies. So they might define it as I said, something new minus depreciation, or they might define it as fair market value, whatever that means. And so it pays to understand which you have. That's it. So that's the difference between actual cash value and replacement cost. Actual cash value is the new cost of the thing minus depreciation, and replacement cost is what it would cost to replace that thing new according to whatever value placed in the insurance policy. So thanks again for watching, and I hope this was helpful. If you have questions about insurance, please feel free to schedule an appointment with me. And thanks again, and have a great day.